Fed's tapering comments, and do you see the weakness in commodities to continue longer?
Yeah, I mean, it's quite some news, especially for the equity markets and for the run in 2013 that is temporarily interrupted, and all money managers are carefully looking into their announcements. On the other side, I think there will be probably further quantitative easing and asset purchase programs running until the economy is back on track and until unemployment rate are at a decent level, I would say. What does it has to say on commodities? Of course, any kind of weakening in money supply would, of course, also limit runs in any kind of market. Also, commodity markets temporarily are affected, as we have already seen with the declines last week so far.
Gold prices are down nearly 30% from an all-time highs. How much more slide do you see in them, and where do you see support coming in?
Yeah, absolutely. We have seen 2013 it's been a very difficult year for commodity markets, but especially for gold and for silver that had really an amazing performance over the past 10 years already. It's not totally surprising, as we have seen also a shift within asset classes going from commodities, and especially from gold and silver that are very liquid assets, to more equity programs, and also temporarily gold has been under a lot of pressure. Where do I see the next resistance lines? The next one obviously is at 1200, which is just the next near-term line, but the very big one is going to be $1,000 an ounce, and the next 1.5 years could still be very difficult for gold and silver, but in the long run we strongly believe that gold and silver are really poised for a breakout, as it's the only true currencies, in our opinion, out there in the market.
How would you look at gold and silver performing in the longer term?
We at SUPERFUND, we have a price target, a long-term price target for the next 5 to 10 years, where we could see even gold going up to $3,000 to $5,000 an ounce. Of course, a very aggressive one, but with all the stimulus that has been created, it would not be totally unexpected.
With the recent volatility in the money markets in China and suggestions of monetary policy tightening, what impact would these have on commodity demand vis-à-vis an already slowing economy?
For base metals, they probably will go a little bit hand in hand with the general economy, and especially with emerging markets. And we have seen most emerging markets weakening this year, and a lot of pressure on China. But even Brazil, we see turmoils that definitely will have temporary negative consequences on most base metals, such as nickel, lead, aluminum, and of course copper. But again, also in the long run, we have we have strong estimations for these markets. But unless the economy is globally recovering and the emerging markets are going to have a boost, these particular markets will also face some pressure ahead.